Hello everyone, it's me, NYSEinstein from the floor of the New York Stock Exchange. I am trying to get to the bottom of what is happening in this market. There is a lot going on. You know, it's rare that nothing happens in a day here, and I try and we can analyze it in so many different ways. And you know I'm not an economist and I'm not an analyst and whatnot, but I'm a forensic something. I like to get to the bottom of the movements in this market on a daily basis. I'm not telling you what to buy or what to sell. I'm not predicting what's going to happen. I'm just trying to understand the market movements on a daily basis. What we saw over the last couple of days, we saw it start happening on Friday. NYSEinstein inside Wirtschaft, kicking butt, taking names later. We saw it happen on Friday let's talk about the last couple of weeks. We've seen the market really responding to headlines coming out of the wild cards out of Washington, geopolitical, USA, White House, all that kind of madness. And then I talked to you about the fact that the market really needed, even though the market is not really sold off, but we are seeing days that are up and down moves. We saw that for a couple of weeks, up and down 400 or 500 points, settling at a reasonable level and a reasonable valuation. And I said, always keep your eye on the fundamentals. So then I also said that we need to really redirect our attention away from headlines back into fundamentals and earnings, which were coming out. Friday, we had the announcement of the financials. There was a lot of anticipation and projection that the financial earnings were going to be solid, and they were. But the minute they hit the tape, everyone hit the sell button. Couldn't figure it out on day one. Buy the rumor, sell the news, often happens. Next day, they kind of bounced back. People redirected their attention. Maybe people were buying into that. Those who had taken their focus off headlines, started to think about it. Earnings, excuse me, and the projections that the financials were going to blow everything away with reasonably low interest rates, with good trading activity and whatnot. Their anticipation was the earnings were good. They were good. They opened up big on Friday morning and then sold off radically. Everyone did hit the sell button. So it could have been to buy the rumor, sell the news. But then the next day they they steadied out, okay, in a good way. Jason Blatt, ladies and gentlemen. They settled down, and they didn't settle down. They actually rallied back, and they seemed reasonable and whatnot. But then once again, that we've sort of seen this weird negative posture and action in the financials, and that seemed odd, having come up with a really good quarter, okay? The guidance that came out in the conference call after the earnings did talk about lack of robust loan growth and competition for deposits. That makes complete sense. So that could have contributed to the sell-off. We don't really know. Then yesterday's analysis of the situation showed that the yield curve was flattening out, which means they are short borrow, long loans. The VIG is getting down tight, and there's not a lot of money to be made in it, basically as a bank, not a trading bank, but as a bank, and that was contributing to the sell-off. People getting out of that and maybe redirecting themselves into the Russell and whatnot, into small and mid-cap with some value. Then what happened today? So there's been Fed chatter. All 12 chairmen, I believe, all Fed presidents have been chattering all week long. We've had a huge spike in oil, commodities and whatnot, a bit inflationary. And that we saw today that the future bet on an interest rate raise due to economic data and fear of inflation, which is what caused the original sell-off that we saw in February, was that there was going to be a count them, 4 interest rate raises, one coming up in June after we just had one in March. Fed rate raise, and that spiked the yield this morning. Spiking yield on the 10-year. It's definitely a signal to sell equities. We saw that come into the market. The market sold off 190 at the low of the day, and that's what's really happening. So inflationary fears, interest rate raises, target signals, a sell in equities. Saw that coming out, and money going into bonds. A good explanation. It's the best I can do for the day. What happened at 3:34 today? There was a tweet that came out, or a blurb, or a headline, came out of Bloomberg, stating that Rothenstein, if that's his name, the Deputy Attorney General, was not that Mueller's probe was not focused on going after the president. That's been marinating for a while with all the crazy wild card crap coming out of Washington that everybody was really out to get the president. The headline came out that the Mueller investigation was not focusing on the president, and the spiders, the S&P 500, the market per se rallied 10 handles literally in 30 seconds. Completely took the shorts by surprise. Huge short covering after that, and the market ended up closing down 80. Slight reversal in oil after it actually getting almost near $70. Brent at 73.5. The S&P was down 15, the Russell down 10. Transport's down 100. A lot of red in the screen. Dow down 90, 24,660 points, 24,660 on the Dow. Still a solid market. Still fundamentals are all right, but definitely we've got this interest rate thing, this inflationary thing, this oil thing. We've got a lot of stuff on the table, and the wild cards coming out of geopolitical uncertainty. Geopolitical uncertainty. Flight to safety, I love you. What's happening in gold? Getting whacked. Don't know about that game. I'll talk to you tomorrow. Einstein out for the day.